side of the fence, and spent several years at InMobi, which is one of the largest mobile supply side players. So I've been very fortunate to have seen both demand and supply ad tech, and spent a lot of time in both web and mobile. Joining me on the call today is Matthew Roche, who is CEO of ID5, a company I'm sure many of you are familiar with, and a host of characters from Progress Partners, including Adrian Zermulin, who leads Progress Ventures, David Arslanian, who leads the Progress Special Acquisition Company, and a host of other Progress characters. Matthew, would you like to introduce yourself and give a quick summary of ID5?
Oh, he's got to come off mute.
Can David or someone please give Matthew the microphone and speaking privileges?
One sec.
We do want our guest speaker to speak. Yes.
I would do so if I could.
There you go. No, it's actually a good tactic because some of you know me and I might have a tendency to run away with the mic. So just, force shut me down. Good morning, good afternoon, everyone. I'm Matthew. I'm joining you from London. I'm the CEO and one of the co-founders of ID5. ID5, as it says on the screen, is an identity infrastructure company. Our goal as a company is to build a better way to identify customers so that we can support digital advertising and ultimately an open and free to access web and mobile ecosystem. We started the company in 2017. I've been fortunate to have Progress Ventures support since earlier this year, and are on way to kind of achieving or at least advancing our mission, and working with probably over 70,000 publishers globally right now, maybe a little over 150 ad tech platforms in a kind of an infrastructure capacity. So really replacing their methods to identify customers so that they can continue to run kind of data-driven digital advertising strategies for their clients.
Thanks, Matthew. So what I thought we could cover today is just a quick summary of some of what we've witnessed to date in other areas, and then quickly summarize what's coming soon to Google via Chrome, and then discuss what the likely implications of that may be. So this is a slide that I was presenting both internally at Progress and in a wide variety of places outside through late 2020. And as many of you may recall, there was a lot of wildly divergent opinions on what the implications of Apple's changes to iOS that were coming in 14.5, which released in April of this year, would look like. And I remember talking to a lot of people at the C-level in various mobile advertising companies who were essentially of the opinion, it's not going to be that big a deal. Apple's going to turn off mobile advertising IDs, but most users will consent and opt in. It's really not going to be that big an impact. And then reality struck. Following the introduction of iOS 14.5 in late April, the original estimates of user opt-in consent to share their details, most specifically mobile advertising ID, were wildly inaccurate. And after most of the iPhone install base had upgraded to iOS 14.5 in the 90 days following its release, what we generally saw was a landscape in which mobile advertising ID had fallen off roughly 90% of mobile advertising supply. And the prior existence of that ID and all of the systems which relied upon it were dramatically more challenged. In particular, targeted advertising, retargeting, person-based attribution and other measurement essentially stopped working. And a new interesting dynamic emerged around iOS. Actually, a variety of interesting dynamics emerged. One of the first of those being that companies who implemented bulletproof implementations of Apple's SK ad network and related capabilities and fully adopted the Apple mindset, most notably ByteDance TikTok, reaped tremendous benefit by virtue of sending as much signal as possible into Apple. They harvested as much attribution credit from Apple's own attribution reporting as they could, which gave them a significant benefit from a return on ad spend as now reported by Apple perspective. Compare and contrast that with a variety of companies who essentially said, we're not going to really integrate with SK ad network. We're going to take our ball and go home, and people can trust us for our measurement analytics. Facebook revised quarterly earnings come Q3, directly, well, actually intentionally not stating it was directly related to iOS, but they've systematically revised their earnings down, ballpark average of minus 10% to gross revenue impact. And they finally came clean and said, yes, we directly state that it's iOS privacy challenges, which are causing that impact. Snapchat Q2 against a $1.6 billion estimate, missed by 250 million, and directly cited challenges with both attribution and measurement on iOS as the primary cause. And a laundry list of companies have begun selling off their meaningful mobile advertising assets. I think most notably, Twitter sold MoPub for nearly the amount they had acquired it for almost 10 years ago. Direct correlation, speculative, but I think a lot of people would say direct correlation. A variety of other very interesting dynamics emerged. In the days that followed the release of iOS 14.5, you had huge numbers of marketers essentially turn off their advertising on iOS 14.5 and shift budget to iOS 14.4 and earlier, or Android. And as a result, you now have Android CPMs, which are significantly higher on average across the board, not just gaming, but in all categories. Android CPMs are now, in most cases, significantly higher. So again, great benefit to Google. Secondly, Apple's own Apple Search Ads business or App Store advertising business grew 50% in Q3 compared to prior year. So Apple immediately benefited to the tune of hundreds of millions of dollars more direct advertising spend against them as marketers continue to look for means of buying user acquisition. All of which is a great long-winded way of saying that user acquisition, retargeting, measurement and attribution on iOS is almost entirely different now than it was in early April of this year. What have we seen? I think a couple broader trends have emerged, largely powered by the explosive growth in OTT and CTV, but also similar strategies are beginning to emerge in the mobile space as well as a direct result of this. Two of those big trends, we're seeing an absolute premium for original content production as companies begin to believe that they need to evolve themselves into walled gardens and build more direct to consumer audiences and rely upon their own infrastructure and advertising platforms and data and audience targeting platforms and measurement and analytics capabilities for a variety of reasons. First, they simply make more money than being reliant upon a huge variety of different intermediaries. So it's classic disintermediation, which has always been a fundamental cornerstone of most publisher strategies. Secondly, the binge watching nature in OTT and CTV and the breakout hit nature of mobile have put a real premium on original content production capabilities. And you're seeing a huge amount of interest in both the investment into original content production and the acquisition of great original content production assets. We could probably spend another entire webinar on just this piece, but it's fascinating. So we're seeing a lot of mobile companies, I've listed here, AppLovin, they've gone incredibly acquisitive in gaming, where they're building up a huge conglomerate under the Lion Studios brand, which now publishes 3,000 plus gaming titles, most of which have come into AppLovin by way of M&A. Digital Turbine spent over $1 billion in M&A in Q1 of this year, largely on supply side ad tech, but they've also begun to expand out into owned and operated content production as well. And I could go on and on. But there's definitely a key strategy here where publishers are seeking to eliminate or end their reliance upon identifiers, move to a proprietary identifier, move to proprietary measurement and analytics and attribution, et cetera. And not to be too speculative, but we have a little insight. You can anticipate relatively significant announcements in next calendar year plus from Amazon, from Snapchat, from ByteDance, from Disney and Disney Plus, from NBC and Peacock, and from a number of others that all align directly to these strategies. So in the browser space specifically, what's coming to Google is not exactly new news. We've already seen this playbook rolled out initially by Apple and Safari, really with the meaningful changes coming to Safari in early 2020 when they introduced ITP 2.0, and with Firefox in the very similar Apple-inspired changes that they made beginning in late 2019. Those changes essentially boil down to the elimination of the third-party cookie as a viable, permanent, idempotent identifier broadly available on every single page view. Some of the more interesting things that came out in Safari were also the elimination of the ability to sync cookies across domains, aka the prevention of link decoration or cookie stapling, as it's broadly referred to inside the ad tech industry. What we saw in both of those browsers as they introduced these changes were that essentially everything that we had taken for granted in ad tech essentially stopped working. So retargeting broke. Lookalike audiences, behavioral audiences at scale broke. Measurement and attribution broke. So you saw a huge number of interesting workarounds as people moved from third-party cookie space to first-party cookie space and began using more APIs and server-to-server integrations to facilitate that. And you also saw a lot of companies that were very heavily focused on retargeting or audience targeting in browser space rapidly begin to pivot or move on to other business models. What's coming to Chrome? Very simply put, the changes which Google has announced are already in public testing today. And we're going to touch on what those all are on the next slide. But what's really critical is that the largest browser by market share, so 65% of web traffic globally today, loses third-party cookies in Q3 of 2023. And in that migration, what's very curious is that all measurement and attribution of all advertising in Chrome will now be facilitated by a Google service and API. Any interest-based, aka audience targeting based capabilities in Chrome space can very happily be facilitated by another Google service called Fledge, very likely for a very moderate tax on any utilization of those capabilities. So ultimately, while this may be touted as Google as a very considerable step forward in consumer privacy protection, it also ultimately looks like a migration of a huge amount of measurement and audience targeting strictly back to Google, where marketers will become almost entirely dependent upon the Googleplex for audience targeting and measurement of audience engagement in the Chrome browser space. With all of that said, Matthew, who wins? Who loses? What are the big shakeouts here? What are the key things that the people on this call should be aware of? Can we unmute Matthew so that when I ask him questions, he can actually reply?
He can do it.
Hey,
All right, thank you. So, I mean, I think it's plainly obvious now that this has nothing to do with privacy, right? It's draped in the good word of privacy and consumer protection, but it is just a competitive, it's Apple and Google basically pushing their competitive advantage to kind of gain more control over the data that is critical to digital advertising. And when we talk about data, we talk, very often this discussion around cookies and mobile ad IDs is kind of simplified into targeting. Or we can't do retargeting anymore. We can't do audience targeting anymore. The real impact, the profound impact, is around attribution. If you control attribution, you control basically where the money is spent, right? And that's why the Google Analytics acquisition 15 years ago was so successful, because it allowed Google to kind of basically tell everybody, hey, look at how efficient Google is, and to drive money to where the efficiency is, right? If you write the rules, obviously you can play better, right? Because you know the game better. And that's what Google has done with Google Analytics. That's what they're doing now with with Fledge and Flock. They're controlling how we are identifying customers, how we are measuring campaign performance. SKAd network is exactly that. Is exactly Apple telling you what works, what doesn't work, and oh, magic! As a result, Apple's own ad networks has increased 50% over the past few months in terms of market share. Because guess what? When you're grading your own homework, you're more likely to have good grades. So it's got nothing to do with privacy, right? Let's not kid ourselves here. It's purely a competitive. I think it's been called predatory privacy, right? It's an excuse, but it's working really well. And as long as the regulators let them do it, why shouldn't they? So the biggest winner, back to your slide two or three slides ago, is might be ByteDance or whatever, but it's really Apple and Google, right? Apple in the case of the iOS 14.5 changes, and Google in the case of deprecation of third-party cookies. The optimistic way of looking at this is that the brands, the publishers, the consumers might also be winners in the end, because really using third-party cookies to identify customers, using mobile ad IDs to identify customers, given the fact that they are either controlled by Apple or controlled by nobody, which is equally bad, wasn't a great infrastructure to start with, right? So we've been using cookies which are autonomously accessible by people to store user IDs, meaning that it's impossible to control who has access to what data. Right, and you mentioned cookie matching, biggest source of data leakage ever. Right, the reason why publishers haven't benefited from the move to programmatic as much as they should have is that the infrastructure we've been using through that transition has been widely out of control, and cookies in particular have been widely out of control. Very difficult to control, very difficult to police, very difficult to know who has access to what. Right, and so the optimistic way to look at this is to say, well, we can do better, right? Good riddance cookies, good riddance mobile ad IDs. Let's build something that works better. And that's really how we're looking at this. We strongly believe that we can do better by having a more independent identification infrastructure, a more privacy by design identification infrastructure, and a more controlled identification infrastructure to power kind of online advertising. And online advertising needs user identification, right? You can't do targeting, profiling, frequency capping, measurement without basically being able to differentiate my computer from your computer, right? If I can't tell them apart from each other, I don't know how to build a profile for me and you. I don't know how to understand how many times I've seen an ad and how many times you've seen an ad. I don't know if my, purchase on the Nike store is related to something that I've seen or something that I've searched for, something that I've done in the past or not, right? So this is really what makes digital advertising valuable for brands and publishers, is the ability to individualized customers from each other, right? If you don't have that, then you work with groups, you work with, it's like television or kind of analog media, where you're like, okay, well, I'm going to reach a group of people who are watching that show or reading that newspaper, and hopefully, a part of it will be in my target audience, but then I accept wastage, right? The promise of digital is that you can get away from this and you can actually pinpoint different customers, and so we need to maintain that. But to maintain that, we need to kind of change the engine in mid-flight and kind of move from what we've been using over the past 20 years, which is cookies to store IDs or IDs provided to us by operating systems such as IDFAs and Android IDs, and find something else that continue to support all of those use cases around data, around targeting, around frequency capping, around attribution. And that's the challenge that we're faced with. So it's a transformation, right? Identification is not going to look the same tomorrow as it looked yesterday, and it's good in a way because it didn't look great before. But it has to be a collective effort, a collective migration, if we want to maintain this ability. The alternative is, Google and Apple decide who is in my target audience and who isn't, who should get credit for ad campaign performance and who shouldn't. And given their already very large market share and level of control over the advertising industry, it's unlikely to be in the greater benefit of consumers or publishers or brands for that matter.
Thanks, Matthew. And I just wanted to remind everyone, if you have any questions, please feel free to raise your hand. We're happy to turn this into a discussion. Matthew, one of the things we hear a lot about today is the massive proliferation of brand new and very shiny alternate identifiers. It seems like every SSP, every DSP, every, of course, identity company, but every attribution company, every data company, everybody's got a very shiny new logo and great marketing and messaging and positioning around their new shiny identifier and why it's amazing and why everybody should go adopt theirs. Now, something I think is fascinating that is not getting a whole lot of mind share bandwidth right now is that some of the largest of these identifiers, whether they're from vendors like LiveRamp or from industry standards bodies that might be heavily backed by a specific DSP like UID 2.0 and its backing with Trade Desk, are essentially hashed email based. And GDPR's Privacy Enforcement Authority has already stated very publicly, very definitively, that any utilization of a consumer's hashed email must be only done on the basis of their opted-in consent for same. So we now have a fundamental challenge with some of the, what were perceived as front runners to be next generation scaled alt identifiers, essentially being ruled to be illegal inside of the European Union. So who wins, what wins, and why?
There's a lot to unpack here. So
I thought there might be.
Let me, yeah, that's a long question, but it's going to be an even longer answer. So there's a lot of identification kind of solutions being marketed out there because people need to have an answer, right? For their investor, for their clients, for their employees. Like you can't just say, I don't know. But if you when you look at adoption, right? When you look at actual usage, there's a lot less, right? So it's important to really distinguish. And the reason why there's a lot less is because an ID is used for two things. It's used for kind of understanding, kind of keeping track of users across different sites and kind of over time and stuff like that. So there's a technical usage of that of that ID to collect data, to kind of tie an impression and a conversion together, right? So that's the technical usage of the ID. For that, everybody can do their own stuff, right? The quality will depend on the scale, will depend on their technical capabilities, will depend on a lot of things, but like you can build your own ID, right? And you should, right? There's a second usage though to that ID is that it's a currency, right? If you have data tied to an ID, it's great. Like if you speak a language, but you're the only ones to speak it, like you can talk to yourself basically, but that's about it, right? And we live in an interconnected world where data flows from buyers to sellers to kind of intermediaries and everything like. So we need a currency. We need something that's common to everybody in the space. And that's where individual initiatives from this kind of no-name publisher that might be the biggest publisher in I don't know, New Zealand, but it's still just a publisher in New Zealand, isn't going to ever become the currency for the world to speak with, right? And so you've got a very large number of very siloed initiatives that have absolutely no chance of becoming a global scaled currency. And that's where adoption is interesting, right? Why would people use an ID like LiveRamp ID or ID5? Is because we have this potential to scale. We have this potential to become the currency that digital advertising can work with. And that's what makes the ID valuable. In addition to its ability to connect the dots, right, across devices or across domains and apps, it also has the ability to be a common currency that the majority of players in the market can adopt, right? And that's where you see adoption really kind of concentrating around a handful or 3 or 4 initiatives on a global basis. So that's the first part of the answer, right? A lot of like self-serving initiative, very little scalable shared solutions that have a chance to become kind of scaled replacement to cookies and mobile ad IDs. Mm-hmm. Second part of the answer around kind of authenticated or hashed email-based IDs. So first, I mean, I don't know if I'm the only European on the call, but identification should be consented to. Like that's not even a debate anymore, right? I know that different regions are at different levels of advancement on this, but like that's where we're going, right? If people think we can continue to identify users without their consent, it might be a transition, but like fast forward 2, 3, 4, 5 years, it's over. We need users to engage, and we need publishers and users to kind of engage into a relationship that says like, if you want to use content and services for free, you need to allow me to identify you so that I can sell ads. That's ads are paying for content and services, right? The choice is not tracking or no tracking, is free access paid for by ads or subscription. That's the real choice. And that's the choice that more and more publishers have to put forward. They're doing that sooner in Europe because they are forced to by the GDPR. But we're starting to see flavors of that with the CPRA, with kind of, the LGPD in Brazil, with like, we're getting there. And the pillars of privacy, which are transparency, say what you're going to do with my data, right? Declare usage and purposes of usage, right? And control, yes or no. Those pillars are here to stay. And going forward, this is going to be the axiom that we'll have to respect: transparency and control. Without that, nothing works. And so it might come as a surprise that you have to have explicit consent to use emails or any other form of signal to identify users, but in reality, it's going to be the norm, right? So the real issue with authenticated or email-based identifier, though, is not their legality or the way kind of it's being handled under the GDPR. It's the scalability. Is with a very few exception, authentication is a minority event. It's something that if you only use email addresses or login events to identify customers, you're going to identify 5 or 10% of the population, because 90% of the traffic is not authenticated. That's the nature of the open web. That's why we call it the open web, right? Outside of the walled gardens, most traffic is not authenticated. And so if we only go into that direction, we are limiting our ability to identify customers and to make the online advertising world operate at scale. So that's the I think a more important problem or challenge for email-based identifiers. I think that's a really interesting question. If I might just pick up the question that Ronan's asking about the GDPR. I've heard that a lot, right? That you can't refuse access to content or services or submit it to acceptance of user data usage. I think that's not the right way to frame it. Content is not free, right? So considering that content is free and asking for the permission to collect data on top of it is like, it's not the right way to. Content has to be paid for.
Matthew?
So if you consider that your baseline is you have to pay.
Can you,
sorry.
Matthew, sorry to interrupt you. Can you like describe the question to us? Because I'm reading it, and if I just, depending on how I read it one way versus versus another. But I think you know how Ronan.
Well, I know what Ronan means, but maybe you want to explain it yourself, Ronan.
You're allowed to mute yourself, Ronan, if you want to.
Unmuted at last. The way it's been described to us is that under GDPR interpretation, if we as a publisher, which we're not, but if we were a publisher, if we wanted to get a consumer to give us permission to use their email address or their cookie identifier or their MAID for the purpose of tracking their behaviors and then sharing that data elsewhere, we can't withhold services. We can't give them a reduced level of content and sort of make it a very obvious tit for tat. So there's a bit of a challenge, I think, for publishers in general of giving the value proposition to consumers. They're like, well, why would I give you anything for free if I'm getting everything for free anyway? And I think most publishers
that's the right caveat. Yeah. If I can get everything for free anyway.
Yeah.
That shouldn't be the default.
And what
the default should be the content is $5 a month. You want it free? Give me your email address. There's nothing in GDPR preventing you to set that up as your default value exchange, right? The problem is that most publishers have considered that content was free by default. And so they've built kind of data collection practices on top rather than kind of build it as a discount mechanism, right? So it's just shifting that logic around. By default, content and services have to be paid for.
And Ronan, give us
unless you agree to sharing data with me, in which case you can get access for free.
Yeah. Just as an example too, Matthew, Ronan, like that happens when you go onto almost any site at this point, right? They say, do you consent to, do you consent to me, using your cookies, right? That's what it says on almost every site you go to. But tell me, when I go, forget about like anything useful, if I go to just any old site, right? How does that impact me, or what's that doing? What's that asking me for exactly? And what am I consenting to?
I'll give it a go. Matthew, block me if you want. It's consenting to the current cookie notice is basically saying I'm letting you set a cookie in my browser for tracking what I'm up to generally. The experience from the consumer's perspective shouldn't change. Regrettably, based here in Dublin, every website I go to hits me with a cookie pop-up almost every day, and it doesn't change the user experience. I can either do yes or no, and there's no difference in the value that I get. So it's very much about, do people like the button yes, or do they like the button no? I mean, it really is. It's down to that right now. And there is a problem in terms of publishers being able to communicate to people, listen, this is our livelihood. We need you to say yes. And, in a sense, plea for identifiers. Yep. On the other side is a lot of people on the call here know that we work with TV data. We were involved with the HCR data. We know that the TV manufacturers got into a little bit of trouble in the early days where they didn't ask the owners of the television for permission to set an identifier and track their viewing behavior. They got a smack on the hand. FTC came down hard on them. Now they all do an opt-in. So when you buy a smart TV, it takes you through the setup and it says, hey, can we track your viewing behaviors? Yes or no. There's no value proposition. It's just, they just ask, and a certain portion of people just say, sure, fine. I'm sure this is a value to you. It doesn't mean much to me. That communication, I think, is still wrong. I think there still needs to be a greater level of explaining to people why it's important for companies to be able to set an identifier and track your behaviors and share that information. And that isn't being done yet by anybody, I don't think. But I think, Matthew, you're onto a good point about the general publishers. The default state should be pay for the content, pay for the news, and then reverse into a value proposition from there.
Yeah,
And you're starting to see. You're starting
actually,
to see.
Matthew, can I jump in
Yeah,
for a sec?
Sure.
Something that's very interesting is how the mobile app developers have shifted this perspective, especially over the past 12 months in anticipation of iOS 14.5. So it's almost standard operating procedure for major mobile app developers now to have either an in-app purchase option to migrate to no ads for $2.99 to $7.99, or even in some cases a subscription of $5.99 per month. That's become the default, whether you're talking gaming, news, whether a lot of travel, which is definitely a fairly substantial shift over the past 12 months in anticipation of Apple's privacy changes. Now, has that significantly changed app revenue in, going towards, dramatically increasing in-app purchase as a percentage against ad revenue? Actually, it has bumped up, but not to, a tremendous shift, from, subscription is not yet the majority for certain.
No, but it's probably protected them against a dramatic, kind of reduction of their ad revenue.
It puts a very fine point on, hey, Mr. Consumer or Mrs. Consumer, if you would like, you can spend that $4.99, $7.99, whether it's one time or subscription, to not see any more ads in the app. And it's very interesting. And I wish there was more published data on that. That's probably an area we should take a look at.
You're starting to see a lot of publishers in Europe, Webedia being one of the examples that comes to mind. They have a kind of fairly simple, or not simple, but like a fairly kind of common, movie theater kind of, movie screening time and movie tickets site that has been free for, it used to be a phone service, right? So it's probably existed over 20 years. And it's been free for 20 years. And last year they introduced effectively a cookie wall or a paywall, right? Say, hey, the consent banner is actually like, I accept, or I pay $1.99 or whatever per month for the subscription. And that's the real trade-off, right? It's not like, it's not a free lunch, right? You don't go to the restaurant, eat your meal, and then decide if you want to pay $5, $10, or nothing, and kind of walk out, right? It's content and services that have to be paid for, and the problem is that we've made this value exchange implicit for the past 20 years. It's been unsaid, untold, right? It's been just like, oh, we want you in because we're going to make money on the time you spend on the site, but we're not going to tell you how or why, or it's going to be like behind closed doors, effectively, right? And now we're a victim of that implicit relationship, and we have to make it a lot more explicit. And publishers have to engage, and brands as well, for that matter, because brands need also their customers to consent to them using data to be able to create their own retargeting segments and all those things. So we have to build this explicit value exchange with consumers that we haven't been able to over the past 20 years. Otherwise, we can't continue to kind of use data for targeting purposes and advertising purposes.
We do have another question for Mark.
Thank you. And sorry if I'm jammed up against the screen here. I had to switch to my phone because I had a connection problem. But Matthew, appreciate the perspective. It's super helpful. Just to clarify a couple points here. First, we're talking about essentially two roadblocks. One is IDFA, so consenting to using my ID for tracking and including an email, essentially. And then assuming that person does opt into that, then we're talking about a second opt-in, if I'm understanding correctly, that essentially I'm allowing you, the publisher, to use my ID in this sort of collective if we kind of look at both of those boundaries and perhaps assume that Android ID goes the same route as IDFA, is there enough scale in the limited amount of individuals that have opted in to produce this, I guess, replication of the current cookie environment that we're talking about?
So there is enough scale of consented traffic on mobile apps or web, which is different from scale of kind of authenticated traffic, right? You can authenticate, so give an email to kind of log in somewhere, but not consent to your data being used. And you can consent, but not give an email. Authentication and identification are two different things. There is a method to identify users using email addresses, but there's plenty of other signals that we can use to identify users. And so it's really important to differentiate the two things, right? So you have, I don't know, a few percentage point, maybe 10, 15% of users that will authenticate. And then you have X% of users that will consent to being identified in exchange for free access to content and services, right? That percentage is likely to be in the 90% plus, because really the portion of the population that is kind of privacy focused enough to pay rather than accept kind of an ad-based experience is very small. Right now, consent rate in Europe, in most cases, at least when there is a true value exchange, is in the 90+%, 95+%, right? So the scalability of a consent-based identification method is not in question. The scalability of an authentication ID system definitely is in question, because you just don't want to give your email address all the time, right? So those are two different things. The reason why we need to have kind of that value exchange in a more explicit manner is to make sure that this 90% consent remains at a high enough level, right? That we can continue to support a one-to-one relationship based on user consent. If users have a choice to say yes or no without any consequences, obviously, why should they say yes? And that's where that value exchange becomes important. When the value exchange is clear, when it's consent to me using data, a limited quantity of data for limited purposes in a transparent manner, or pay $2.99, 90% of the population says yes to using data. But we have to kind of make that value exchange clear and explicit.
Thank you.
So we're in the last 10 minutes. I'll remind everyone, if you do have any questions, please feel free. David Arcelanian has a question.
Yeah, I just thought I would pose it to the broader group. Matthew, I'd love to know what is 10 years from now? I mean, I think when cookies were originally invented, no one thought they were going to last for, but a year or something. I remember, way back then when we hand scribed, what the cookie, where do you think it sort of is 10 years from now? What should we be looking out for?
So, I mean, I think advertising is data-driven, right? There's no putting the genie back in the bottle, and so 10 years from now, it will still be data-driven. And if we have it our way, it will be powered by, those transactions will be powered by ID5 IDs, and maybe a few other kind of global currency, right? You look at the financial markets. I think 75 or 80% plus of global financial transactions are in dollars, yen, or euros, right? And so we'll have the equivalent of those kind of globally accepted, scaled currencies that will power digital advertising transactions. And so they won't be based on cookies anymore, or at least not third-party cookies anymore. They will be based on consent, 100%, and they will be based on a clear and kind of consented relationship between customers and the first parties they engage with, right? The publisher, the site, the app developer that they're getting service and content from, and those relationships will help power the advertising, the data-driven advertising transaction that pay for content services. No more cookies, still user-level ID and user-level data, because that's where the world is right now. We're in a data-driven state when it comes to marketing and kind of customer interactions. And I'm 100% convinced this is where we'll be in 10 years, but it will be more transparent for customers, at least those who care. We'll be able to find information of what data have you been using and why, and how can I opt out of that transaction if I don't like it anymore. More controlled and more protective of people and publishers' assets as well.
Mark has another question. You can unmute yourself again.
Thanks. Just one follow-up. What do you see as the inflection point for publishers, large publishers? And I know that's kind of a general term, but those that if you think of maybe the top 10 or 20 publishers, here in the States, even in Europe for that matter, what's the inflection point that enables them to make this move to sort of share their data? How do you sort of perceive that that transition occurring? What's really going to be the carrot for them to join a collective?
So we already work. ID5 already works with 2 of the top 10 and I think 18 of the top 50. So that transition is already underway, and those publishers have chosen to work with us because they don't have to share their data, right? They don't kind of share data with a collective, and they don't lose out. They really kind of use a method. They use a solution that we provide them to better monetize their assets, right? And I think that value exchange has been really important to our success with those, particularly the bigger ones, because they don't want to lose out, right? They don't want to have to kind of hand over. I mean, they've seen the movie already, right? Like, hey, like ad networks, can you sell on my behalf, please? No, you shouldn't do that again, right? You need a technical enabling method to be able to monetize your own assets yourselves, right? And that's exactly the type of value exchange we have with our publisher partners. So I think that's what they need, and I think the direction of travel for the industry, right? The fact that we're losing mobile IDs, we're losing cookies, we're losing, and like when you've got your back against the wall, you don't have a choice anymore. You need to do something, right? And so some publishers have taken kind of early steps to kind of get ahead of that transition. Others are only kind of starting to consider this, and others will wake up in 6 or 12 months, right? But eventually, again, advertising is data-driven. You cannot do data-driven advertising without user-level identification, without cookies and maids. Your existing infrastructure doesn't exist, so you don't have a choice. And I think that's the biggest driver of adoption.
Yeah, to build on that. Go ahead, Mark.
Oh, sorry, Jeff. Just to follow on that. So it's an interesting point, though, that you make that publisher is not sharing their data. So it's an important distinction. So if you think about a collective like UID2, where in theory, you need those large publishers to share that data, correct, in order for that to scale. So are we talking, so does that premise sort of imply that, we won't see, I don't want to just pick on UID2, but we won't see UID2 scale from in the way I think it was initially intended for full action purposes.
So I think that they, to defend UID2 for a minute, right? I don't think it scales for authentication reasons, because you won't be able to have 100% or a big enough portion of your traffic authenticated, and so that's why it's not a sustainable kind of. It's not sufficient on its own, right? But putting that aside, UID2 isn't a data sharing co-op. We're calling this data sharing because we're thinking about it today in the context of third-party cookies. And if you give an email to someone who drops a third-party cookie on a device, then they can use your email elsewhere without compensating you for it, right? Cut off the third-party cookie dimension of that discussion. You share an email with UID2, you get a UID2, and you're the only one benefiting from it. So you're not losing out here, right? You're losing out while there are third-party cookies. When there are no third-party cookies anymore, you're not losing out. You're just enabling yourself to identify customers with something that is recognized by the buyers, right? Yeah. I think it's really important that publishers understand that anything that they like, whatever we do has to work for both sides, right? Because if it doesn't work for buyers are just going to put their money into Google and Facebook. So the whole kind of walled garden, I'm going to build a walled garden, I'm going to, you know, solely sell my own data because I've got the best data in the world. Like, no, publishers don't care about your, I mean, they care about your data, but also care about their ability to use their data. They care about their ability to measure. And if you just do something that works for you and doesn't work for them, it's not going to scale. It's not going to work. Right? So that's the part of the exchange, you know, that we need to figure out. That's the notion of currency that I was talking about. We need something that enables you to monetize your assets, but also enables buyers to understand what this asset is and how it works for them.
And that's the critical piece right
balance.
there. So one of the things we're seeing is that you're going to see a proliferation of walled gardens. It's happening right now. And you're going to see that with certain household name e-commerce companies. You're going to see that with a lot of the social media platforms who have not already introduced self-attribution and elimination of identifiers across their programmatic supply. Like, that's coming, and it's coming in a big wave in the next 18 months. And there's a lot of fascinating trade-offs there, but the one critical piece is what Matthew just said. Those publishers, upon the implementation of their own content fortress / walled garden strategy, where they turn off identifiers crossing the transom, exactly the same way Google and Facebook have already done across AdX and FAN, they have to have a scaled identifier in place for demand to be capable of showing up and actually understanding the value of that audience, being able to apply data to it, et cetera. So yes, we are going to see a balkanization in the publisher world, and a significant increase in the number of companies who seek to offer their own walled garden and self-attributing network capabilities similar to Google, Facebook. AT&T is already there. Several other companies will be taking giant leaps down that path next year. But what's going to be fascinating is how they implement that while also providing an identifier back to the demand side that enables them to show up with demand in a flawless, seamless way without interrupting media buying. And Trade Desk, as the primary advocate of UID 2.0, have certainly been trying to get ahead of that by enabling UID 2.0 to execute at scale in programmatic so that they can retain as much of that marketer-facing demand across their premium OTT and CTV supply, for the largest part, as much as possible. So they're in a good position to advocate that. But as certain e-commerce companies introduce a proprietary identifier and namespace that, as a lot of the streaming services go walled garden, as a lot of social media platforms also go walled garden, I think a fascinating revenue stream will expand for bridging identity matching and join rates between each of those separate walled garden namespace environments. And I think you're going to watch, strongly biased opinion as an investor in ID5, I think you're going to see the value of assets like ID5. I think you'll see the value of capabilities like zero trust clean rooms that tie back to these underlying identity capabilities significantly increase in both value, but also marketer facing demand. So I think there are going to be some interesting wins in the next 2 to 5 years.
I think it's, I mean, you need to think of it as data is an asset, right? And it makes sense to build walls around your assets because you want to protect that. That's your core kind of, fundamental value, right? Identity is not an asset. Identity is an enabler, right? It's the currency that helps you monetize the data. So identity should be a commodity, should be something that's available to the wider ecosystem, so that you can make those assets more easier to monetize, right? More fluid, right? And so it's really, but it's different. Like, identity isn't anybody's core asset. Otherwise, it doesn't work. It needs to be shared. For it to work, it needs to be shared. It needs to be a currency. It needs to be adopted by as many buyers as you can. That's how you create competition for your assets. So we really need to think of those things as two different things. Data is asset. Identity is a commodity that enables the monetization of data. When you think about it that way, it's very clear that walled garden should be built around data assets, but you should enable user IDs, permissioned, controlled, protected, privacy compliant user IDs to flow freely between buyers and sellers so that your assets can be made visible and can be made buyable by the greater number of buyers out there. And that's how a lot of those kind of walled garden discussion are shaping up and have to shape up in the future.
Great point to end on. Thanks, Matthew. So we're up on time. I want to be respectful of everyone's time. Thank you all very much for joining us today. I know that this session has been recorded, so you can largely benefit from Matthew's science and knowledge again in the future, and probably fast forward through my own nonsense. But thank you all very much for joining. And if you have any follow-on questions, please feel free to drop us a line.
Thank
Thanks
you,
so
everyone.
much.